What's going on, y'all? Welcome back to another episode of the Struggle to Strength podcast, your source for real life application on how to turn your struggles into strengths in all things mind, muscle, and money. I am your host, Josh Levine. I'm joined here by my longtime friend and my co-host, Travis Hatch. And today we are joined by Bitcoin expert, Jimmy Song, who is a Bitcoin developer, educator, and entrepreneur. We get into all things crypto, and Jimmy answers some great questions from our listeners around Bitcoin, how to buy and store crypto, and why Bitcoin is the safest and best option for anyone looking to invest. Y'all, Travis and I learned a lot from Jimmy. And we're probably both going to go buy some Bitcoin right now, right?
Oh, for sure. Yeah.
For sure.
Yeah.
So if y'all are interested in money, I highly recommend you stay tuned. Before we get into it, we ask that if you love this episode, please give us 5 stars on Apple or a follow on Spotify. Share us on your socials, tag us in your stories. You can find me at Josh Levine Fitness, Travis at Travis Hawks Media, and Jimmy at Jimmy Song Bitcoin. Tags are in the show notes. Plus, y'all can now follow the podcast on Instagram. We just launched socials for the show, so please go give us a follow on Instagram at Struggle to Strength Podcast. Y'all, like I said, if you like money, I highly recommend that you stay tuned and stay attentive. Jimmy is about to drop some bombs on y'all. We'll see you inside.
I have to say you are one of the most anticipated guests so far. We're a pretty new podcast, but this is the first time I put out I was putting on my Instagram who the guest was going to be, and I had so many people texting me, messaging me. They're like all super interested to hear your info. So I'm stoked, as am I.
Yeah.
I'm very
okay.
I'm excited. Yeah, everyone just wants to make money. So
I know, right?
I think that's pretty universal. So.
They really do, and yeah, we'll talk about it. But yeah, the current system is just so horribly broken, dude.
Yeah,
and that's the reason why people are all searching for something.
Why do you feel like it's broken? Well, what's so broken about it? Obviously, we know it's broken.
The current system.
Yeah.
Essentially you have the central bank who can do whatever the heck they want with the money. So
True.
in the last year, they expanded the money supply significantly. So M2 went up from 15.5 trillion to 19.5 trillion. The M2 is sort of like a measure of all the dollars that exist in the world. It went from 15.5 to 19.5. That's like 30 something percent. And that was to fund all the PPP loans. It was to fund all the stimulus checks. It was to bail out a ton of different big businesses. But yeah, it's all this kind of it's a game that they are allowed to play because they control the money. And this is the big thing about Bitcoin. It's not controllable by the feds, and they can control pretty much everything else, right? Like stocks, real estate, and even gold to some degree, and a lot of other things. But with Bitcoin, it's very difficult for them to control. So that's why people are flying in. So yeah, we'll talk about it.
Yeah. So that makes, obviously that makes a lot of sense.
Uh-huh.
When did you start catching on to that though? Like you know a lot about Bitcoin, and I want people to understand who Jimmy Song is, why you're an expert. So I'd like to talk a little bit about that, but also when you started catching on to this and when you thought it was going to take off.
Yeah, I learned about it 10 years ago, and I almost immediately thought, okay, this is a good idea. Like fixed currency that nobody controls, that you can buy portions of. I thought that was a very good idea from the very beginning. Unfortunately, at the time, it was kind of difficult to get in. So, I was like, this is too much work. And back then, Bitcoin was $1. So, one of the biggest regrets in my life is not buying at $1. And later on, we had like the very first Bitcoin bubble when it went from like $1 to $30, and during that time I was like, all right, I better do something. And yeah, since then I've learned more and more about economics, and game theory, and how money works and the history of money and all that stuff, which has given me the conviction to say, okay, this is it. This is the thing that I need to make sure that I help bring into the world is some form of sound money, because that's what's desperately needed right now.
Mm-hmm. And I'm sure part of your hesitation in getting in early was just because I feel like earlier on there was a bigger barrier to entry, right?
Yeah. Oh, huge barrier to entry.
So
you had to, yeah.
How did you do that before? Because now you can just go buy on Robin. You can buy on Robinhood, right?
Yeah, and you can go buy on Cash App or a bunch of other websites. Yeah.
So what'd you do before?
Well, so back then, what you had to do was you had to go like the only exchange that you could really trade on was Mt. Gox. There were a couple others, but it was kind of sketchy. But in order to get money to Mt. Gox, they were based in Japan. You had to use this other service called Dwala. And in order to get money into Dwala, you had to link your bank account to it. And that took like a few days. And then you had to link your Dwala account to your Mt. Gox account and then send the money that way. And that took like a few days. And it was cumbersome. And then, of course, like Mt. Gox in 2013 kind of went bankrupt. And a lot of people lost their money. Thankfully, I got my money out of there before that happened. So, I mean, there were just so many sort of ways in which I could have tripped up, but thankfully I didn't.
That's amazing. Yeah. And I mean, looking back now, Bitcoin is at like 55,000. So there's always that, obviously, yeah, if you'd bought it at $1, that would be amazing. But getting in, there's so many people who are like, I wish I could have got it at 30. So it's all, kind of relative, but, the main thing that I think we wanted to do today was get into like some Q&A from our listeners. Cause like I said, this was, pretty anticipated. We asked some like questions. We got a bunch of really good questions. And before we get into that, I think I broke it down into a few different, sections, which is like, kind of, a lot of people are looking for like a really simple explanation of what Bitcoin is or what crypto is and like, kind of how it works, how to get started, all of that stuff. But before we get into that, do you want to just give a quick breakdown of like who you are and what you do in the community professionally, how you bring cryptocurrency to people and your criteria, I guess, for it?
Sure. I've been a programmer all my life. I started when I was 9 on like, programming like basic and things like that. So I started doing it professionally right out of college. I did a bunch of different startups. So I've been a programmer for over 20 years now. And 2011 was when I learned about Bitcoin. 2013 was when I started contributing to some open source projects that were Bitcoin related. And as a result of that, I ended up, like really getting into Bitcoin and wanting to do more things in the space. I ultimately ended up working at 3 different startups that were Bitcoin related. And during that time, I found that a lot of programmers were getting very frustrated trying to learn Bitcoin. And I had felt that same frustration, which is why I started, teaching developers how to program the Bitcoin protocol. So that ended up being a seminar, which I still do. It's a 2-day seminar for programmers to learn all about the Bitcoin protocol. Also published the book with O'Reilly, essentially doing the same thing, but in a book form. After that, I started getting a lot of speaking gigs at different conferences and so on, which led me to ultimately write a couple of books, the Little Bitcoin book and Thank God for Bitcoin, which are more for lay people, not technical, jargon or whatever. It's meant to be a nice intro to Bitcoin. One from just sort of like a lay perspective, another from a moral perspective. But yeah, that's where where I started. I'm a programmer at heart, and I have a bunch of followers on Twitter, and I write a newsletter every week that gives sort of like the technical overview of Bitcoin and so on, of what's going on in Bitcoin rather. And yeah, that hopefully that answers your question of who I am and I guess why I'm qualified to talk about Bitcoin on this podcast.
Yeah, it definitely does. And I think it's great. I'm glad you mentioned your books because I think a lot of people, well, myself included, I'm not super educated on crypto. Travis knows a lot more than I do.
I've been going down the rabbit hole over the past month, but I think us, when you say like the lay person for like technology and morality, that is 100% the two of us. And I think pretty much probably all of our listeners. Yeah.
Yeah.
Yeah. And that's normal. I come from a technical background, and what kind of put me on the map was writing a bunch of articles sort of explaining what was going on in the Bitcoin world back in 2017. And a lot of people were kind of confused by it because they didn't understand what was going on. Sort of technically, there was this fairly controversial, upgrade to Bitcoin called SegWit that a lot of people didn't understand. And I was brought on a lot of YouTube shows to just explain what it is and why, what the two sides were arguing about and so on. And I wrote a bunch of articles to explain it to people. And that's where I kind of got my start in this space as sort of like a public figure.
That's so awesome. And I think that's, so you've explained it a number of times. I would love, that's kind of our first question that I wanted to get into from at AJ Whittington D on Instagram. But he asked, could you explain crypto like we are all 5 years old? and so I was hoping you could do that. I had another question that was similar. It said crypto for dummies. What is it? Why should everyone care about it or learn about it? And I think that's probably like the number one question that we have now is like,
people don't know what it is.
What is it?
Yeah, they don't understand it. And
it's
so
like
they're afraid
fake money or something. People have no idea. So
yeah. So the way I would explain Bitcoin is that it is digital gold. And if you think about gold and what it is, it's a fairly rare metal, and it ends up being a very good money because it's rare and has a bunch of other properties. For example, it's pretty divisible, and any ounce of gold is as good as any other ounce of gold, what we would call fungible, right? You can exchange them, and it doesn't really matter. It's also, decently divisible. It's, fairly portable. It has a lot of value density, so you can bring it across the world and, without having to, use a container ship or something like that. It's pretty durable. It doesn't spoil like fruit or something like that. Those are all good properties of money. And that's why gold was used as money for thousands of years. But the most important part of gold is its scarcity. Throughout its 5,000-year history, the inflation rate of gold, or new gold that's coming into the market as a result of people digging it up out of the ground, has been around 2%. And that's the key, because lots of other things used to be used as money, but they are no longer. So, for example, salt used to be used as money. That's where we get the word salary from. But it stopped being used for money once somebody figured out how to make giant quantities of salt at the same time, because they essentially flooded the market. Wampums used to be used as money. In fact, Native Americans used it. And for a while there, a lot of the European colonists didn't have enough metal, so they started using the same wampum. These are like tiny seashells that are pretty rare, as money as well. This is where we get shelling out as meaning like, paying money. That it's also where we get clams for dollars, right? Like it was literally clams at one point. So, but once somebody figured out how to produce a lot of wampums, that destroyed that as money as well. So the death of any sort of currency or any money is in sort of an oversupply. And that has happened to a lot of different things that have been used as money in the past. Gold is special in the sense that we haven't figured out a way to generate lots of it. It's not that people haven't tried. The entire, thing called alchemy existed for people to try to make lots and lots of gold. They couldn't do it. That said, it's possible that may be true in the future. NASA, for example, found an asteroid in 2019 that had more gold in it than all of the above ground gold that we currently have. So if there were some way to efficiently mine gold out of that asteroid, then gold would probably demonetize in the same way that salt and wampums and glass beads, rhinestones, lots of other things that have been used as money in the past have. So when I say digital gold, what I mean is that it's like gold in the sense that it's something kind of like in nature, right? Like it's not centrally controlled like the dollar is. The dollar is issued by the Treasury and essentially controlled by the Federal Reserve, which is the central bank of the United States. If you think about how Visa, they're sort of like the middle party in every transaction. That's kind of the role that the Fed has in whenever money is being printed or money is being created and so on. So whereas gold, you can try to go dig for it in your backyard if you own your backyard. That's something that you have the right to do. You're probably not going to find any, but if you did find some, then it would be worth a lot of money, and you would have done nothing illegal. But if you made your own $100 bill, the Secret Service will come and arrest you because that is illegal. The only people that are allowed to produce dollars are the Federal Reserve and the Treasury. So as a result of that, what we have with Bitcoin is more like gold and less like dollars, right? Like it's not centrally controlled. It's what we call decentralized. And on top of that, it's also digital, which means that it has all of the convenience of digital things. So, we don't send letters in the mail anymore. We just send an email, right? Like that's a lot more convenient than sending a letter. In the same way, most of the fiat system, most of the dollar system, the euro system, all of the currencies in the world are mostly digital because it is way more convenient to transact digitally than it is to take a suitcase of $100 bills and, send it over or whatever. In the old days, they had to do that with gold, right? All these sunken ships that had a lot of gold in them. Well, they had to bring the gold. And this was like a major thing that you had to insure against was, a storm that might, sink your ship and then all the gold that was on it would be lost. You had to bring the gold in order to trade it. That is largely taken away by or mitigated by the fact that Bitcoin is digital. So think of it as digital gold. Almost everything else that exists that's digital is centralized in some way, shape, or form, including altcoins. So you guys kept saying cryptocurrency. For me, there's Bitcoin and then there's everything else. And
those are called altcoins, right?
Altcoins, yeah.
Yeah.
So Bitcoin is actually decentralized, right? There's no central controller. There's nobody that forces you to upgrade the software that changes the rules and so on. With every other coin, there is a central controller, usually a founder or a core developer team that decides on all of the rules. So in much the same way that the Federal Reserve Chairman and the Federal Reserve Board decides on the interest rates and if anytime they're lowering interest rates, they're expanding the money supply. So think of it as sort of like printing money. A lot of these centralized controllers of these altcoins, they get to decide, hey, you know what, we're going to expand the supply of this particular currency at this time, or contract it, or do whatever. They control the monetary policy. So Ethereum, for example, which is controlled by Vitalik Buterin and the Ethereum core devs, they've changed the monetary policy of Ethereum like 20, 30 times. And this is something that they can do because they're in control. And they could, for example, tomorrow say, hey, you know what? We're going to print another billion Ethereum and we're going to give it to ourselves. They're probably not going to, but it is something that they are able to do because they control the software that checks all of the rules. So Bitcoin is decentralized, altcoins are not. And that's what makes Bitcoin special. It is digital gold. All of these other things are kind of people being their own central bank. It's creating yet another fiat currency. So That's how I would describe it. Does that make sense?
Yeah, that does.
Totally.
And I'm glad you went into that last part about the difference between Bitcoin and altcoins, because while you were explaining them, all I was thinking was, well, why can't someone just make more Bitcoin? But what you're getting at is that it is truly decentralized. Do we know who started Bitcoin? Do we know who made it? This was a question that we got on Instagram from It's All Jay Lee. Do we know who started it?
It's a pseudonymous developer named Satoshi Nakamoto. We don't know who Satoshi is. It might be a he, she, they. We really don't know. Like Satoshi covered his tracks very, very well. And yeah, we have no idea. But the nice thing is Satoshi left about 11 years ago and disappeared, never to sort of say anything again, which is kind of a strange thing. But it's probably one of the best things to have happen to Bitcoin because it really decentralized.
Yeah, because now you can't print more.
Well,
they mine it, right?
Well, so not exactly. So Satoshi essentially ran Bitcoin for the first year and a half, and what Satoshi wanted, Satoshi got, because Satoshi was the creator. But after Satoshi left, then it became sort of a community project, right? There wasn't a creator that made all of the decisions and so on. It was just the community got to do what it thought was right. And the ethos of Bitcoin is such that it's always backwards compatible. So if you are running software from 2011, it will still validate everything and check that the ledger is keeping its rules, including the 21 million limit. There will never be more than 21 million Bitcoins. And that was encoded into the first piece of software that was released back in 2009. And it continues to this day. Whereas with something like Ethereum, they said it would be this many, but actually it's now this many. And then every software upgrade is backwards incompatible. So they change, however many Ethereum there will be by changing those rules almost on, every 6 months or so. So, and all the other altcoins do something similar. They can and do change their monetary policy, whereas Bitcoin has had one monetary policy credibly for its entire 12-year existence. By leaving, this became a more decentralized project. Became a decentralized project because Satoshi wasn't in charge anymore. And that was the key. And to this day, 10 and a half years later, it continues to run. And there have been backwards compatible upgrades, but nothing that sort of suddenly changes the rules in a way that doesn't comply with what all the rules that came before, including the 21 million limit.
Interesting.
Okay. That is interesting. Yeah, I didn't know about the 21 million limit. That definitely makes a lot more sense now.
Yeah, no, that's part of the absolute scarcity of Bitcoin. And for that reason, it's actually more scarce than gold. Gold expands at, about 2% a year. So, you project that out and it goes to infinity. Similar thing with Ethereum, Doge, and a lot of these other coins where, there's a fixed inflation every year or something like that, in which case you're going to have an infinite quantity at the end of it. So it doesn't necessarily store value that well. Probably stores value better than the dollar, but it's still going to infinity. Whereas with Bitcoin, you own one Bitcoin right now, it'll be still 1/21 millionth of all of the supply of Bitcoin. 20 years from now, 50 years from now.
The demand is high.
Yeah. And that's why you say it's like gold, because like you buy some gold, you own some of the gold that exists on planet Earth. There's not a central bank that can just be like, here's a bunch more gold. You're kind of separated from that. So, I mean, that makes a lot of sense where it's something that, I think gold is a perfect example, because what a lot of people do when they're scared of what's going to happen with the economy is they put money into gold because the dollar might drop and then gold is going to go up. That's a very, that's a very, like, I don't know if that's exactly how it works, but I just know that a lot of people do that. Like they put money into gold to hedge against, inflation basically with the dollar. So my, another question that I got, which is, this perfectly relates here is like, is crypto, or I guess gold as well, is that a currency or an asset? And what's the difference there? Or is it both, or is it neither?
Yeah. So from the IRS's perspective, it's an asset. So whatever capital gains you gain on it, then you have to pay taxes. That's the only real difference. It's like as a bearer instrument, it's something that you can actually own, right? Almost everything else is a custodied instrument. So, for example, if you own some stock, you don't. They used to give you actual stock certificates, and you had to hold on to them. And if you wanted to sell them, you transferred that stock certificate for some money or something like that. They don't do that anymore. It's a registered instrument. So there's a ledger somewhere that tells you, hey, you own this much, and then when you sell, it's they change the ledger around and so on. With Bitcoin, it's an actual bearer instrument, much like physical gold. If you have a physical gold bar in your hand, that is yours and in your possession. With Bitcoin, if you have the private key, then the Bitcoin is in your possession. No one can take it away unless they can get that private key. Just like no one can take away your gold unless they come in and like sort of seize it away from you. So that's sort of like a big thing for a lot of people, because they get kind of scared that they have like basically like a giant gold bar in their house if they own like a significant amount of Bitcoin. But security around it is a lot easier than securing gold. Gold vaults have like motion detection systems, like steel doors and armed guards, and like all sorts of things to make it difficult for people to physically steal. With Bitcoin, because it's digital, there are all sorts of techniques that you can do that don't cost all this money, like motion detection systems and so on.
Interesting. So I actually don't even know how you would buy gold. Like,
you could go on eBay. eBay tends to be pretty. Yeah. You could go buy like 1 ounce coins on eBay. There's a bunch of gold dealers and so on.
Okay.
But yeah, like you have to take physical delivery of gold because of something called fractional reserve banking, and this is actually what kind of started off the central bank in the first place. Is that what a lot of so people don't like holding gold, especially if it can get stolen away from them, right? And it's and especially if you own a lot of it, you become sort of a target for people to come and take it from you. So what people started doing was to store their gold with somebody that knew a lot about security. So gold became centralized for that reason. Those are places that we now call banks, but back then they had an actual function of storing all of the gold and making sure it didn't get stolen. Unfortunately, when you put all the gold in one place, what the bank is able to do is say, oh, you know what? We'll lend out some of this gold to other people.
Right.
But instead of actually delivering the gold, they say, well, you have an account with us. You have a credit for 4 ounces of gold. And whenever you need it, we'll give it to you. But you don't need to convert it. We'll take care of it. And this is where fractional reserve banking came into play. They started lending out gold that they didn't have, right? Like nobody was the wiser, because unless a lot of people withdrew the gold at the same time,
which has happened,
which is called the run on the bank, right? This is the plot for a lot of movies like back in the 30s and so on. But unless everybody withdrew at once, nobody was the wiser, and the bank collected interest on the gold it didn't have that it lent out, and so on. And this is happening in the gold market today, right? There are only like 5 or 6 giant gold vaults in the world. There's like one in London, I think one in Hong Kong, one in New York, and several other places. They lend out gold that they don't have. And this is what you call paper gold. It trades just like gold, but it's a claim on gold in those vaults. And they lend out more claims than there is gold in that vault. So if there were ever a run on that gold vault, then they would be essentially bankrupt. But there's more sort of gold floating out there as a result of that. And this is kind of the shenanigans that happen when when everyone is sort of forced to trust one entity, is that they can inflate the supply essentially. And this is ultimately what led to fiat money. The US dollar was at least nominally backed by gold up until 1971, when Nixon cut ties to gold. Until then, at least foreign central banks could trade $35 for 1 ounce of gold. And France was threatening to do it. So Nixon just shut the window and said, no, sorry, we're not going to do it, because he knew that way too much gold would be transferred to France. So that shut the gold window and put us into this position of purely fiat money where it's backed by absolutely nothing. So like the physicality of gold is kind of a problem. And this is something that Bitcoin solves beautifully because it's not physical at all. You don't have to take physical delivery. You could take digital delivery, which is kind of crazy. You could take digital delivery kind of like an email, which ultimately gives you possession of it, halfway around the world in like 10 minutes, which is crazy, but that's how it all works.
So if you were to buy and sell gold, there are different options. There's different gold buyer and seller establishments. How do people buy and sell crypto?
Yeah, for Bitcoin, you can get a wallet, and you can get one for your phone. You can get something called a hardware wallet. There's a lot of different options, but essentially you can possess it digitally. So any sort of computing device can hold Bitcoin as long as there's software for it. So on your phone, there are various wallets that you can download, that Samurai, for example, and Bread Wallet and many others, where you can actually receive Bitcoin, and you possess it on that phone. If you lose that phone, then you lose that money, unless you backed it up, in which case the backup can restore your wallet on another phone or something like that. So that's essentially like one way in which you can send and receive Bitcoin. Where to actually buy it are what we call exchanges. So Cash App, for example, has a Bitcoin buy option, and that's an exchange. You can give them dollars, and they will give you Bitcoin at whatever the exchange rate happens to be. There are lots of other more formal exchanges. Kraken is one. River Financial, Swan Bitcoin. Everyone's heard of Coinbase as well. Internationally, there's like Binance and Bitfinex and OKX. There are exchanges all over the world, serving nearly every market that you can think of. And that's where you would deposit fiat money and be able to get Bitcoin, or go the other way. You can also buy a lot of altcoins in a lot of these places. I generally don't recommend that unless you really like to gamble for some reason. But yeah, that is an available way to get those.
Okay.
Now, when you're talking about storing these coins, the first thing I'm thinking of is, okay, like I have Bitcoin stored on my phone. I drop my phone in the toilet or something. That money is gone unless I back it up. So how would I back it up? And then also, as far as like security goes, how do I store passwords? Because they're all secure through passwords, right?
Yeah, sort of. Most wallets make you back it up as part of the setup process. Okay. So the backup is called the mnemonic, and it's usually 12 or 24 words, common English words that you write down and store somewhere. And you can put it into your bank vault, or etch it on metal and leave it in your safe or something like that in case your house burns down. You can still read the metal, right? Like something like that. There's even a way to split it. So like there's a standard called slip 39, which is essentially a way to back it up so that you need like 2 of 5 of these in order to actually recover it. So you have 5 shares. So a thief can steal one of them, but it wouldn't do any good. They would need 2 out of 5 of those in order to recover it, something like that. And these are sort of like computer science techniques which make it super secure and so on. But that's an option that you have to go and back it up in more interesting ways than just like a single password that you write down on a piece of paper and store it away in your wallet or something. And then your wallet gets stolen, and then it's gone. The thing is, if you lose that, if somebody steals your 12 or 24 word passphrase, it's gone. Unless you're doing some other stuff like multi-sig or whatever. But there are mitigations, and this is an area of research for a lot of people. But generally, most people are comfortable like holding it on a single, on a device, a hardware wallet. This is a single function device instead of your phone, which does lots of things. This only stores Bitcoin, something like that. And you back it up into and put it in like a geographically different location than where your phone is or where the hardware device might be. And that's a pretty good system for most people, and they are able to recover their coins if they lose that hardware device or their phone or something like that.
Okay. Yeah. And that seems like if somebody's interested in like starting from scratch with this, that seems like something that you need to research on your own as well. But like what you would research is you find an exchange where you can buy and sell it, and then you find a wallet where you can store it. And however much money you plan on putting into it would be a factor that you consider for your risk, like whether, an online wallet or a hardware wallet, or, if you have like hundreds of millions, probably having like lots of different keys all over that you need to like combine is probably good. But if you have like a couple $1,000s, maybe not, don't need to do that.
Yeah.
much.
If it's a couple $1,000s, you could leave it on an exchange. You could buy GBTC or, the Canadian ETF that's out now that like with your broker, that'll give you exposure. If it's a couple $1,000s, that's probably fine. But for those of us that are actually storing value in it, like, wanting to keep it for 5 to 10 years, a lot of these entities might go bankrupt in those 5 to 10 years. In fact, many Bitcoin exchanges have gone bankrupt, especially in its early history, including Mt. Gox, which at the time was the biggest exchange in the world. So, it's fairly like if you're planning to store it for the long term, it's worth learning how to store it yourself, or at least with a custodian that gives you some transparency. With Coinbase or something like that, they have just a giant pool of coins somewhere, and they put a lot of security around it, but there's no guarantee that somebody can't go and steal it. Whether it's somebody from the outside or a rogue employee or whatever. And this has happened over and over again with a lot of Bitcoin exchanges. So it's very important that you possess your own coins, because then you're not having to trust a third party. And on top of that, it's much harder for somebody to go and take. I don't know if you guys know about Executive Order 6102 back in 1933, but this was the executive order by FDR to make it illegal for U.S. citizens to own more than 1 ounce of gold. And he was able to enforce that and essentially seize all gold from U.S. citizens, because most U.S. citizens had their gold at the bank. And at the time, you could take $20.67 and get 1 ounce of gold from the bank at any time. But with Executive Order 6102, that stopped. So most people didn't have any gold because they were just using dollars because they were more convenient. But that hasn't worked out very well for them. This is something that could happen under Bitcoin, like as Bitcoin gets more prominent, and certain governments might act against it and so on. So it's important that you possess your own coins. The people that held their own gold in their own house, well, they were able to sort of hide their gold away or something to that effect as a way to make it, and not necessarily obey the government. They at least had that option. And a lot of people in different countries that are going through hyperinflation, it's important that they have an asset that isn't easily seizable from them because governments tend to do whatever they can to get their hands on your money. Essentially, they can accuse you of being a domestic terrorist or something, and essentially close down your bank account, that sort of thing. So, Bitcoin, at least for me, is a hedge against all of that stuff.
Okay, that makes a lot of sense. And now, is owning your own coins, would you recommend that for everybody or only for people who have substantial amount of money invested in something like Bitcoin? Or if someone's just putting some money into whatever they can buy on Robinhood, do they need to worry about that?
I would think so. I mean, Robinhood almost went bankrupt.
I remember that
GameStop stuff. So, like, if they went bankrupt, then you're just a creditor. Not necessarily going to get your Bitcoin that you stored with them. And this is the thing that's happened over and over again in the Bitcoin space, is that these places go bank, especially over a long enough time period. Something happens where they get hacked or some rogue employee does something weird or whatever. There was an exchange in Turkey the other day where the owner went missing and nobody's been able to withdraw their Bitcoin. Like, this stuff happens all the time. So, it is important to take it out, especially if you care about that money. If you don't want to bother with learning how to secure your own Bitcoin and stuff, I can see an argument if you're sort of like getting in and out within 6 months or something like that. But over a long time frame, there are going to be weird things that happen to these places, and very few companies in this space have lasted all that long and have not suffered some sort of hack. So it's important to make sure that you possess your own coins as a way to not be vulnerable to a lot of different attacks that are possible against these honeypots, essentially, which are exchanges.
So it sounds like, as someone who's brand new to a lot of this, it sounds like there's less of a barrier to entry now to get into Bitcoin and altcoins than there was in the past. But if you want to do it right and be safe about it, there's still a barrier to entry. We still need to learn more. So what would you suggest for someone who's trying to learn more about this or invest more in Bitcoin or altcoins? What coins should we look at first, and where can we find more information as far as what to invest in and how to keep our money safe?
Yeah, so I would invest in Bitcoin and forget about all the altcoins. And I would learn as much as I could about Bitcoin, because that is the one thing that has lasted 12 years. None of this other stuff has lasted all that long. And I'll tell you something. I've been in this game a long time, and I've seen a lot of people come in, and almost always the sort of first two instincts of new people are, how do I get into mining so I can generate my own Bitcoin? And what hot new altcoin can I buy that's the next Bitcoin? Those are the instincts of people that come in. And you find out very quickly that mining is a very thin margin business. You have to have a lot of expertise in running data centers, procuring equipment, and getting the right technicians, and getting very cheap power and making these large deals, skills that most people don't have in combination, in order to mine at a decently profitable rate. And altcoins, usually people get into because they are either greedy or envious of the people that got in before. They feel like they're too late to Bitcoin, and they go, okay, well, I'm too late to Bitcoin. What's new right now that I could get into that'll make me a lot of money? And this is the reason why the top 10 cryptocurrencies, if you look on CoinMarketCap, turn over so often. So I did a tweet like a few weeks ago about the top 10 top 10 altcoins, so non-Bitcoin coins from 4 years before. And almost none of them are, like 3 or 4 of them are on the list now, right? Like all of the ones that got replaced, all of the ones that are new on there are fairly new coins. People want to get in on the ground floor on this stuff. But if you track its performance against Bitcoin over a long period, they almost always do horribly. And the top 10 from 4 years ago, they're all down 60% or more against Bitcoin. So like you're not really diversifying or changing anything. On the short term, if you're very good at trading, you might be able to make some money, but most people are not very good traders, which is why traders make a lot of, the good traders make a lot of money. So I would just recommend buy and hold Bitcoin. You don't need exposure to any of this other stuff because they don't have a proven use case. They're much less mature. They're centrally controlled, and it's it's a speculative gambling thing if you're going into those. Whereas with Bitcoin, it's got credible long-term scarcity. It's something that you can like deep dive into and actually understand, whereas a lot of this other stuff, it's just like sort of nonsense white papers that claim to do stuff that's essentially impossible. So
yeah, and I've seen, I heard that large companies like maybe even Facebook are have been buying a lot of Bitcoin recently, and potentially like adding them to their balance sheets. Is there any validity in that? Have you heard about that?
Yeah. So Michael Saylor started that off with buying a bunch of Bitcoin for MicroStrategies. So MicroStrategies is a company that he founded like in 2000 or something like that. It's been around a long time, and it's got it had like $1 billion on its cash balance sheet, and he recognized right away that the U.S. money supply was expanding really rapidly, and that, as he called it, it was a melting ice cube. He needed to put it into another asset. He found Bitcoin, so he started buying Bitcoin with those dollars. And of course, he's done very, very well. The MicroStrategy stock trades very correlated with Bitcoin price these days, and needless to say, it's done very, very well. Tesla also bought about a $1.5 billion worth of Bitcoin. They sold some yesterday. They revealed that they sold some to test liquidity, according to Elon Musk. There's a few other companies that have been putting it on their treasuries. Michael Saylor, I think, held a seminar for CFOs that were interested in doing what he did. And there's a lot of companies that are looking into it because if you're holding cash, it's really kind of losing its purchasing power very quickly. They need to put it into another asset as a way to hedge against the coming inflation. I don't know if you guys have noticed, but a lot of raw materials right now have gone up in price significantly, including lumber, aluminum, copper, plastics, computer chips, like lots of different things. And that will, sort of percolate into the rest of the economy and cause prices to go up, at which point your dollars are worth less than they were because they can't buy as much. So a lot of CFOs are having to deal with this, and Bitcoin ends up being a pretty good hedge against that.
What is do you know, I don't know, maybe you don't know the answer to this question, but this is a question that we got. What's the process of starting your own coin?
Well, it's really not that hard. You fork Bitcoin and you change a few parameters, give it a nice name and a logo, and then launch it out into the world. Now, it doesn't mean that anyone would actually do anything with it. And the vast majority of coins that have existed are completely dead. There's something like 7,800 different coins on CoinMarketCap. Most of them are long dead, right? Like nobody's done anything with them for a long time. Everyone wants to print their own money because they want to be their own central bank. And it is relatively easy to do, but I wouldn't recommend it in any way. Like people like the idea of being rich without doing any work. I think it's better for you nice. if you just like work for your money. It'll be better for your character. It'll be better for your soul. It'll be better, as like sort of like a member of civilization, like just contributing to it rather than extracting wealth from it, which most people seem intent on when they ask questions like that.
And it seems those like there's been a few, like Dogecoin was one of the things in the news.
Yeah, it's like a joke.
Yeah, exactly. But like lots of people heard about crypto in general from that because of like all the hype around it. But it seems those things kind of like spike up and crash basically. What's your thought on something like Dogecoin or like buying buying into something like that?
So if you're a really good trader, you could probably do well doing stuff like that. And I mean, this was the case in 2017 too, where there were a whole bunch of ICOs and everyone was in ICO mania, right? Like, what's the newest ICO coming out? Let me go buy some because it'll 5x in the first day or whatever. Eventually, there was such a glut of ICOs, and most people that owned these, where 5x on the first day, they didn't sell on after the first day. They held on, and then it would slowly go down, and they didn't know when to sell. And next thing you know, they're not down 90%, right? Like this is such a common story. Most people are not good traders, right? Like
Right.
even if you're up on paper by like 80%, you're not necessarily making that much money. And you make a couple of bad bets, all your profits are wiped out. Which is why the professional traders make so much money. They're on the other side of these trades that you're making. So I would generally recommend against it unless you happen to be a really good trader. And if you are a really good trader, a good way to know is if you close out your positions before you go to sleep. And you're making a consistent profit, on a quarter to quarter basis. So most traders I know don't hold positions while they sleep. So they buy and sell multiple times in one day, and they go to sleep at like all in cash, something to that effect. And then when they wake up, they'll trade some more and so on. Those are what the good traders do. If they know exactly when to get out, what signal they're looking for, they have stop losses and things like that. Most people don't have that. They don't even know what a stop loss is, or
What is a stop
limit
loss?
trades. It's basically if it goes below this number, just sell, right?
Yeah.
Like,
Okay.
And you can make it sell
I'm thinking-
automatically, right?
yeah. That's putting in a stop loss. So that you don't lose all your money. You're limited in your loss. But a lot of stop losses get triggered. They don't. They use little leverage, or if they do use leverage, it's on a small amount and stuff like that. A lot of the people that do get into altcoins and stuff, they honestly, like it becomes kind of like this full-time job of like researching different coins and so on. And most people don't have the technical knowledge to actually understand what the coin is supposed to do anyway. So it ends up being just like a giant gambling thing for most people. And this is why I don't recommend it. It's I've seen a lot of people lose a lot of money, right? Like had they just bought Bitcoin on the day they discovered it and not gotten into altcoins, they would have done like 20 times better. But instead they fiddle with altcoins and try this, try that. They like the rush of it, and they end up getting wrecked. A lot of people lost a lot of money during the last ICO stuff. And it's coming right now. Like, you look like a genius if you own Doge at like 6 cents or something like that.
It's just luck, though.
You look like a genius. And the thing is, a lot of people convince themselves that they are geniuses because they got lucky. Ultimately, those are the people that end up losing 90%. Like it happens.
So if you have done that, like, let's say you got into like some of these altcoins and like made some money, what it sounds like to me is you should probably sell that and just put it all into Bitcoin, and just hold that. Take your profits,
and count
move
your
it into
blessings.
Bitcoin.
Yeah. The thing is, like, once you get a taste for that sort of thing, where like, this is something that my dad told me a long time ago. The best thing to happen to you if you go to a casino the first time is to lose a little bit of money. I was like, why? Well, so if you win a little bit of money, you're going to be tempted to play way more. If you win a lot of money, then you're definitely going to be playing a lot more. And if you lose a lot of money, well, that just kind of sucks. But if you win a little money or a lot of money, you're eventually going to lose a lot of money. Was his point? Because you're just going to want to play more because you think you're a genius because you happen to get lucky. Whereas if you lose a little money, you understand that it's kind of like a terrible system, and that the odds are stacked against you. You just kind of walk away, and that's it. It was entertainment, and that's it. For a lot of people that have gained money on altcoins, they're not going to be able to stop after like a 2 or 3 or 5x gain. They're going to keep playing, right? This is the casino. And this is why I think it's so dangerous for a lot of these people. A lot of people have a hard time walking away after they won a bunch. They want to keep playing because they think they're a genius. When in fact they just got lucky. And that's the unfortunate reality. I know a lot of people won't take my advice, but I'm going to give it anyway. Just keep it in Bitcoin. Stop trading altcoins. I promise you, a lot of people thought like you many times over the last 10 years. With a very few exceptions, most of them have ended up losing a lot and ended up regretting their decision, getting suicidal thoughts and worse.
I think it's great advice. It seems like if you're an expert in this field and you want to like trade coins with understanding the risk, like great. But if not, just buy Bitcoin and hold on to it, because it seems like that's going to be, we're past that point with it.
Yeah. You're like buying gold.
Yeah.
At this point.
Yeah.
So it makes sense.
Yeah. Just buy it and hold it. It's a lot less work, right? Like, if you're like researching 80 altcoins or whatever, that's a lot of time that you could be going and earning money and buying Bitcoin. Instead, like you're researching all this stuff. People don't realize when they're trading and doing all this research and stuff, that's opportunity cost, right? Like you could be going and like making money, like doing whatever it is that you're good at. Instead, you're pouring all this time and energy into stuff that isn't really profitable for anybody.
And that's honestly part of why I think a lot of other people who are probably listening haven't gotten too deep into Bitcoin and altcoins, because it just feels like a whole different world that I know nothing about. I don't know a lot about the stock market anyway, but I do know that I invest in things that are reliable, things that I have just bought and left. And I've done that forever. I know I'm not going to pay close enough attention to pull out when I need to. So Bitcoin is essentially the best bet for someone who just has money to put away. And then go spend your time doing your job and making more money to buy more Bitcoin.
Yeah, and this is why we in the community call Bitcoins a savings technology. It's for your savings, right? Like instead of trying to figure out how to, beat the system somehow and like make lots of money. It's just it's your savings. You already put in the work to make that money, right? Like whatever money that you're investing. You don't want to work again to keep that money, or by researching lots of stocks or real estate or whatever investment. Just keep it in Bitcoin. It's a savings technology, and if you really understand it, then it's fairly easy to just hold and like forget about it. And here's my savings, and that's it.
So this is my last question. I think this is probably our last question then, just because we're running about an hour. But my question would be, what could cause, if I put a bunch of money in Bitcoin, obviously we've determined that that's the safe bet. I understand that very well now. What could cause it to crash? Does it act similarly to the regular stock market, or what do we have to look out for there?
Well, I mean, Bitcoin has had like multiple crashes of 80% or more. So 2011, 2013, second time in 2013, 2017, it's crashed a lot. And it does so on a regular basis. So you kind of have to mentally steel yourself against that. And that's part of the deal is if you're holding it long term, then the short-term fluctuations shouldn't bother you. If you're going, like anyone that's held Bitcoin for 5 years, no one's like, they haven't lost money. Like over a 5-year period, it's always made money. Whereas, with a lot of other stuff, you really can't say that. But during those 5 years, you're going to have an 80% drop in there somewhere. That might, if you're really convicted about it, then that's a great time to go and buy some more. But if you're not convicted about it and you're going to sell your what we call paper hands, right? Weak hands, the people that sort of sell when the times get tough. That's not going to be good for anybody. That ends up being very bad for you. It shakes you out of your position and so on. I know a bunch of people that sold at 3,500 or whatever, during this, recent bear market. But that's part of the deal is there's no return without some level of volatility, and those are two sides of the same coin. If you want a lot of reward, you're going to have to be able to take a lot of volatility. If you want something that's very steady, you could go buy U.S. Treasuries. They return like 1.5% per year for 10 years, something like that. But that's not a very high return, but it's very, very steady. So you reduce volatility, you also reduce upside. Bitcoin has a very high upside, but it also has high volatility. And that's something that as an investor, you need to be able to stomach.
And we're young. A lot of our listeners are pretty young, and we can take the risk. Yeah, it's fine. We'll live if we lose it.
And it seems like it basically runs on a cycle. So it continues to go up over like a 3 or 4 year period, and then it crashes. So just understanding that, like if you buy into it, it's going to like crash, but eventually it's going to crash, which would probably be a good time to buy some more. And then it'll go back up. It doesn't mean if you buy some Bitcoin and it crashes, it doesn't mean that it's done and you need to like sell all your money and lose everything that you put into it. Yeah. Just be,
you just have to be patient. If you bought at the absolute peak of the last cycle, it was $19,000.
Right.
Yeah.
That's
and
still,
now it's like
you've still done very well. And that was at the absolute peak. Like there was literally like 40 minutes where you could have bought it at 19,000. Every other time in the last 4 years, it would have been under 19,000. But that's how things go sometimes. But even if you were the absolute unluckiest and bought at the absolute top at $19,000,
you're still
would have like tripled your money.
Yeah, you're doing really well. Well, I mean, say no more. I'm sold. So I don't know about you, Trav. I'm gonna figure out how to buy some Bitcoin. I'm gonna read your book. Well, you have 2 books, right? Let's do this. I think we're at about an hour now. Trav, do you have anything else you want to wrap up?
Yeah, I think that was perfect.
Jimmy, I want to, well, for one, I want to read your books, and I think a lot of our listeners are going to want to learn a lot more about you and a lot more about what you have to say. I really appreciate you coming on. I learned a lot.
Same.
Like way more than I ever would have expected. So I really appreciate you. Why don't you tell our listeners where they can find you, your books, more of information about Bitcoin? Give yourself a little bit of a plug.
All right, sure. So my website is programmingbitcoin.com, and that's the title of my first book that I wrote for O'Reilly, and that's a technical book. But I have 2 other books that are more for your audience, as you say. There's the Little Bitcoin book and Thank God for Bitcoin. You can find them both on the website. You can also find all 3 books on Amazon, and they're available on Kindle. The last 2 books are also available on Audible, so you can just sort of listen to it if you like to listen to books instead of reading them. I'm on Twitter at Jimmy Song, Instagram at Jimmy Song Bitcoin. I have a newsletter, jimmysong.substack.com. I'm on Medium, jimmysong.medium.com. I'm on GitHub at Jimmy Song, and I feel like I'm missing something, but yeah, I mean that's enough. Those are the ways that you can keep up with me.
You're everywhere, man. That is awesome. Well, I love it. I learned a lot from you. To our listeners, I really highly recommend that you go follow Jimmy. Of course, he's a wealth of knowledge, and if you like money, then he can help you. So, Jimmy, thank you again for coming on, man. It was a real pleasure, and I'm sure we'll keep in touch. To all of our listeners, thank you for tuning into another episode of the Struggle to Strength podcast. We will see you next week.